The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the May 9th. Wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstances that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. Of course, if you can't dial in, you can always send me an email. Let your fingers do the walking. Send me an email at steve@tfnn.com. Inside that subject heading, please put radio show question. That way I can ferret your email out because it's important from all the other stuff that gets sent to that email box out there. And, of course, inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading up 172 points, 24,531 is the print. S&P is up 23 points, 26.94. NASDAQ 100 up 54 points. Russell up 8. So it's mean and green across the board. Spot volatility index down 78 cents, trading out at 13.93. Gold is off 80 cents. Silver's up 6 pennies. Light Sweet Crude up $2.20. She's trading at 71.26, leading the charge here to the upside. Biorad Labs up 21 bucks and change. Actually, that's not the leader. The leader is Google up 25 bucks. That's 2 3/10%. Then you've got Penumbra up 14 bucks or 10%. You've got New Relic Inc. up $13 or 17%. Certainly things moving to the upside. To the downside as well, looks like Coca-Cola is down 29 bucks or 17%. Middle Bay Corp down 25 bucks, 19%. Weibo down 13%. That would be 17 bucks. So we've got things moving to the upside. To the downside, of course, what I want to look at is what you want to look at. And we're going to go to the first question that really was posted inside the Tiger's Den earlier this morning. I'm paraphrasing here because I don't remember it. In fact, it was really about the Russell 2000. So the question was, I believe, is the Russell 2000 a candidate for making a top? And then there was also taking a look at the small caps with inside the S&P 500. So I'm going to just focus in on the Russell 2000. It's always good to take a look at the big picture. We're already back up towards its highs out here. And I'm taking a look at the IWM right now. The reason I'm going to look at the IWM on a monthly basis is because it shows you the confirmed A to B equals CD to the upside. This takes us back to 2009. We've done this before, but it's always good to revisit it and do it again. That's when the Russell 2000 was trading out at 34.26. Right now, you're 158.74. Makes a straight move line up into the 2015 timeframe, June of 2015, when it prints out at 129.10. Now, the volume on that month for the IWM was 669 million shares. Makes about a 0.382 retracement. Wasn't exactly 0.382. It was exactly 0.3739, but close enough for our game to call it a 0.382 retracement. It does that into the low that came about in February 2016. Now, that B point at 129.10, which had volume of 669 million shares, was passed with wide price spread, accelerated volume. For all of you that have Tom O'Brien's book, The Art of Timing the Trade, you know that is how you like to see a confirmation of a B point. I didn't give you the volume. The volume was 50% more. It was 901 million shares. Yeah, 50% more than the swing point from back in 2015. I'd say that's wide price spread. I would say that's accelerated volume. And what we have seen here is a very strong move inside the Russell 2000, meaning when I say strong move, all of the price is way on the left-hand side of the same exact angle that took us from that A to B level. What does that mean? Look, there is a one-to-one. This is the bigger picture. This has not to do with what's going on, you know, for the next 15 minutes or 30 minutes or 24 hours or 48 hours. This is the bigger picture out here. And the bigger picture says the Russell 2000 is not going to go ahead and make a top out here, a top of significance. That doesn't mean on a short-term basis that it can't or it won't and so forth as it makes its way back up to the high in January 2018, which had 431 million shares. By the way, it's only May the 9th, and you're at 121 million shares. I'm no math genius, but it appears to me that this thing is moving into that level with some volume out here. Too close, too early to call, but it's not exactly like it's on light volume from a monthly standpoint, and we are in the so-called unfavorable seasonal cycle process. So where's the one-to-one take us? 188.48. I say not a chance. If we get past the highs here of January 26th, of course, I don't know what the actual date was inside the Russell. May have been a different date out here. But there's no way it's just a 1-to-1 A to B equals CD to the upside. When I say no way, I mean no way. Price will head to the 1.272, maybe the 1.618 level. That's 214.28 or 247.09 out here. That's what the pattern of the lightning bolt of the A to B equals CD to the upside is telling us. The other question was, hey, is this a topping candidate? What I want to do is come back here and follow the money. This chart here that you and I are looking at, or a set of charts, is the Russell 2000 in U.S. dollars. That's the left panel. Next to it is the Russell in euros. Next to that is the Russell in yen. And the very right-hand panel on my screen is the Russell in Great British pounds. This is a monthly chart. I'm going to go back with my cursor, and it'll in essence place that cursor on each of these time frame charts out here. I mean, I'm going back to June of 2007, when the Russell 2000, June or July in 2007, when the Russell 2000 topped out. What you will notice is the Russell 2000 topped out in dollars, topped out in euros, topped out in yen, and the actual top inside of the Russell in pounds took place a few months earlier. That actually took place in March of 2006. The point is that when a market makes a top, it will do it in all currencies out here. Now, take us to where we are at today. Where we are at today, the IWM in euros is already above the all-time high. In yen, it's very close. And in pounds, we are above the all-time high. Folks, you can go back and you can study this pattern. You go back to 2000, you'll see the exact same thing. If the IWM Russell 2000 already above its highs in these other currencies, there ain't no way that there is a top that is forming in the Russell 2000. Steve Rhodes with TFNN. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Are you an options trader that's looking for that extra edge when placing trades? David White will be hosting a webinar on May 16th, which is the Wednesday leading up to Options Expiration Friday in May, where he'll discuss in depth the methodology he uses for trading options near expiration, including swing trading setups and expiration day trading scenarios. Subscribers to each of Dave's newsletters, Path of Least Resistance and the Technology Insider, gain access to this 60-minute webinar, which will be archived if you cannot attend live. Dave has had some great option trades recently for his subscribers. See for yourself the trading methodology he uses when trading options by signing up today for either of his newsletters, and we'll see you Wednesday, May 16th at 5 p.m. for option trading near expiration, analyzing swing trades and expiration day scenarios. For all the details and to sign up today, visit the front page of TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So if we switch over to the daily time frame for that same set of charts with regard to the Russell 2000, in this case here, we are looking at the Russell 2000, the cash indice out here. Again, the left-hand panel is the Russell in dollars. Next to it is in euros. You'll see that in euros, you'd be paying for the Russell 2000 index at 1345.94. That level of 1340.43, that was the all-time high. So you can see that today we're taking out that all-time high. Then you've got yen next to it, and then the pounds over to the right-hand side. You'll see that today that the all-time high for the Russell 2000 priced in Great British pounds is above that all-time high. Therefore, there's no way that there is a top that is forming inside the Russell 2000. If somebody tells you, hey, but look, it's making a third lower or second lower high, meaning going back in U.S. dollars, going back and take a look at the high from January 24th, and then you get a retracement out here from March the 13th that just makes up that swing point but doesn't make it over, and then you see that today this still has not gotten above the swing point from March the 13th, and they're looking at it and saying you're still making lower highs. What you can do is just say, well, that's interesting. But what's it doing in euros? What's it doing in pounds? Because if you don't know the answer there, then what you're doing is you have both hands tied behind your back, because you want to understand how each of these markets are moving in all of these currencies out here. Now, I'm not saying that the Russell 2000 isn't going to form a top. I'm just saying that right now the conditions are not in that do not even suggest that that is a possibility. And it's not going to happen until we at least see the Russell 2000 take out its previous highs. And then when we take a look at the confirmed A to B equals CD pattern in the IWM, it has got much further to move to the upside over the long haul. Look, if we go take a look at shorter term time frames out here, such as 30, let's change it to 60. I guess I could leave it at 30. Nah, we'll change it to 60. We'll just go change it to 60-minute time frame out here. So now we'll take a look at the Russell 2000 equity futures contract. Left-hand panel, 60. Next to it, 120. Next to that, 240. Next to that, daily. Next to that is weekly. You will see that it's mean and green on those first four panels. Mean and green, meaning you take a look at those green shoots, basically saying that price is above the profile levels, the top of the box of profile levels for each of those time frames out here. And that says, okay, well, where's the next resistance level? Well, inside the Russell 2000 equity futures contract, it's up at the 1605.55 level. That is where price is headed to, or at least that's the conclusion that we should draw based upon what we see going on inside of these other intraday timeframes. Price might already be up there for all I know. I have a 10-minute delay. That means what you're looking at here is price as of 1:11 in the afternoon. But the Russell 2000 is awfully strong. I do not believe that we, based on just simply other patterns following the money, that we are anywhere near a top inside of it. And if we're not near a top inside of the Russell 2000, are we really saying that we're in a top in the Dow, or we're in a top inside the S&P 500? And the answer there is no. We know that when the Dow makes tops, it uses a pattern that has been present before every single bear market that has existed over the last 130 years. I'm not talking 99% of the time. I'm talking 100% of the time. And that pattern just simply doesn't exist. It might exist if the Dow takes out its highs again, but we'll deal with that when we get there. We're just not there just yet. So even though we've covered this ad nauseum, I still think that it was important to cover, because it's got to make us say, something to think about. Now, let's go take a look at what else is going on inside the markets, what other signals we might have out here. Let's take a look at the advanced decline oscillator readings for the New York Stock Exchange, for the NASDAQ Composite, for the Dow. And we can see that each of those are above zero. When they are above zero, those are the bottom panels that you're looking at on my screen, little blue squiggly lines out there. When you're above zero, it tells you that buyers are the ones that are in control. With regard to the S&P 500, that's the right-hand panel on my screen out here. Prices below the 50-day exponential moving average, which, by the way, is at 1726. Let me just make sure that is correct out there. Yeah, 1726 is a 50-day, and right now we're trading at 1389. So all conditions. Now, where are prices headed to? In the case of the New York Stock Exchange, our best next target is going to be the swing point from April 18th. April 18th inside the New York Stock Exchange, 12,774 is the top, 12,722 is the low. In the case of the NASDAQ Composite, what we can see that's going on out here, let's just go ahead and explode the screen, that what it's trying to do right now, it's trying to repair the window. That's right, repair the window. There was a gap to the downside inside the NASDAQ Composite between March 21st and March 22nd. That's the yellow horizontal line going across my screen. Now what we can see here is prices traded into that level. 73.25.35 is the exact level of resistance. The high so far today, 73.21.80. So it's not exactly gotten there, but it will get there, or it should get there. And if it closes above 73.25, where will it head to next? Well, then it starts heading back to the island Mon. And the island top that existed inside the NASDAQ Composite is at the next level, be 74.35 out there. The level after that would be the, let's just go ahead and grab, well, I need to grab some type of tool out here. Let's make this a yellow, yeah, the yellow submarine, the yellow horizontal line out here. And as we take a look at that, 74.69. One thing at a time. And this is what we really need to focus on. And that is that the NASDAQ Composite has got that most bearish pattern that you could ever form, which is that island top. And there is nothing more bullish than a failed bearish pattern. Now, the pattern has not failed just yet. But based on what you and I see going on inside the Russell 2000, and in fact, if I had some way to take a look at the NASDAQ Composite in volume, but even without volume, what could be forming out here is an A to B equals CD to the upside on a daily basis inside of the NASDAQ Composite. Of course, we can go take a look at what's going on inside of the QQQs out there and maybe get a pretty decent feel. So why don't we do just that? Let's come on over. Let's go see what kind of party is going on inside the Qs out here. And let's change this to a daily time frame. By the way, they've got a confirmed A to B equals CD to the upside of 185.54 on their monthly time frame. But let's not stop there. Let's just simply try to get a feel for its open window and see what it is doing. That same price level is going to be the March 21st low, 166.19. You can see that the Qs are already above that. The swing point that is dealing with is 29 million shares. This is from the trading session of April the 18th. Now, you've done 13 million shares. Again, not a math genius, but it seems a little bit light in the loafers on volume. Doesn't matter. Just because you cross a B point with light volume doesn't mean you're not going to go ahead and generate an A to B equals CD to the upside. And if that is, in fact, what the
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Sorry about that little technical glitch out there, but we seem to have it repaired. So let's go to our next question. This comes in from John in Sarasota. And John asks a question, are we near a bounce with cane, sugar cane out there? So we're taking a look at the Tecrium Sugar Fund. CANE is the ticker symbol. Of course, this likely holds one or two different sugar futures contracts out there. Maybe for you guys in the den that trade sugar, maybe you can tell me. I'm going to try to what contract we might be on, or maybe somebody can look up to see what contracts are inside of cane. Because John, that's really going to be the best way for you and I to try to figure out if it has found a bottom. Now, what we can see here, just looking at the ETF itself, we can see that this thing did bottom April 25th and made a nice little move out here, and you had a little sign of strength on May the 2nd. So at this stage here, all that it's really done is done a nice little retracement. On a weekly basis, the week of April 23rd, began April 23rd, you have a little hammer candle out here. So it is most certainly, just in taking a look at this chart, irrespective of the actual contracts in place out here, it's at least giving you signals that it has tried to bottom. If we, let's just see what's the best that I can do out here. Let me see if I can find no sugar tonight in my coffee. All right, let's... there we go. So let's take a look at, I've got the July futures contract. Anybody out there know? Anybody else know? Anybody know? It looks to me like this is the active contract out here. And so I don't know if it's more than just July that's inside that Tecrium fund or not. But as we look at the 60-minute time frame chart and look at the 5-hour time frame chart, let me just switch this to 240-minute just for the heck of it. And boy, this doesn't show any kind of bottoming signal or pattern out here. Let me see if I can actually pull up the sugar contract on my other set of charts out here, because this set of charts would be really nice for being able to show some bottoming signals. So just give me a moment to do that. We'll see if I've got sugar inside the entire arsenal of symbols, and I'm going through them, and it's like being in New York. There's a lot inside here. So now we've got sugar, SB, oh, come on. Don't, stop. I'm not referring to you. I'm referring to, there we go. So I do have, yeah, I've got July. Let me see if we can get this thing. This is the daily time frame chart. Let me see if I get this populated out here. Yeah, we're pretty close. It's not getting today's data out here, which is unfortunate. It has yesterday's data. But, hey, John, we're going to go with what we have. That's the only way I know how to, that's how we roll around here, or that's at least how we try to roll around here. So here's what we're looking at. And what you didn't want to see was you didn't want to see sugar necessarily close below Stevie's red line. Yesterday it was priced at 11.34, and you're at 11.32, it looks like right now, give or take. Yeah, 11.32 to 11.29 is what's showing up on my screen out here. And so if you're inside of this and you close below Stevie's red line, what that would suggest to me is you're going to go back and test the low that we just identified out here on a daily basis. That would be the low, John, of the trading session of April 25th out here. That's at least in the sugar contract. What's going to go on inside of the Tecrium, that I don't know. But it's April 25th as well. You should have good support at about 736. So hopefully that assists you with regard to what you are looking at. Thanks for writing in. Thanks for listening. And let's see if we've got any other requests out here, because if you took the time to write in, I am going to take the time to answer your question. So let's see if I've got anything else out here, and the answer is no, I don't. Okay, so we're good. We're good to go surf around and see what else it is that we can find inside of these markets. Let's take a look at light sweet crude. Why don't we go take a look at light sweet crude? That would seem to make sense since that thing is moving to the upside, and see if there's any profile information that we can glean. Now, I'm going to first just punch up my synthetic contract because that would provide us with the best information with regard to daily and weekly. Boy, you can see we are above everything out here, meaning you've got green shoots across the board in all time frames. So this is not showing any kind of a topping pattern when we take a look at this. Let me do this. Here's the, so where is light sweet crude headed to? Let's put the longer term. When I say longer term, I'm referring to a weekly time frame out here. And the weekly time frame shows you've got a 1-to-1 A to B equals CD to the upside inside of light sweet crude. That completes at 71.24. We're trading at 71.31. You've taken out wave number 7. Price is still moving higher, doing less relative energy, but price has held Stevie's red line. That is 68.57. So unless we see a close below Stevie's red line out here today, right now, 1:37 in the afternoon, 68.57, where price is headed to is 79.18. The 1 to 1.272, A to B equals CD to the upside. The only issue that light sweet crude has on a weekly basis is the mere fact that it is moving higher, doing less relative energy. If we take a look at the daily time frame chart out here, we'll see that's really not an issue. No issue whatsoever. In the daily time frame, Stevie's red line happens to be 69.85. However, I would be focused on not the daily time frame. I would be focused on the weekly time frame because any pullbacks out there are nothing more retracements into the support level. And I can say that because for over a week, subscribers and I have been tracking light sweet crude, looking for a top because it had a 7th wave move. It had a Gartley sell pattern, but we didn't take that trade because we were watching the weekly time frame, for Stevie's red line. And that kept us from getting in on the wrong side of the trade. And for that, I'm grateful on this wonderful day in May. This is Steve Rhodes with TFNN. We've got the Dow trading up 190 points, S&P up 25. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. free. For more information on the Taz Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So, we opened that last segment. Then, I guess the first segment, my system went down and it cut off what I was talking about inside of the Qs out there. And I was giving a price projection with regard to its A to B equals CD pattern to the upside. And the same thing, if we come back into the 2008 timeframe, that's where the bottom was put in, by the way. That was at a price point of 25.05. Makes a run into the 2015 timeframe out here. The actual high would be 115.75. Makes a little retracement out here, and then it's off to the races. The 1-to-1 inside of the Qs is 185.54, and the 1-to-1.272 is 210. But with regard to the Qs themselves, and was asked if I could go over with the price projection, let me try to dig out this chart, see if I've got this handy dandy chart out here. That is going to be NDX and stocks breakout. Here we go. So the real price projection that Stevie has, this is not off the table. It's never been off of the table out here, top dog, is that for the NASDAQ 100 to make a move up to the 88.45 level. Because really what the NASDAQ was doing, if we just simply step back further and we don't concern ourselves with the low in 2008, which is really nothing more than a test of the lows in 2002, what the NDX 100 was doing was trading a big old consolidation between 1996 and 2017, and price broke out of that consolidation with conviction in a convincing manner out here. And what that should lead to over time is a measured move equal to or greater than the actual consolidation level. So what I've got, and we're not going to work on this, not going to be to the T, but about 88.45, the 8800 level is where the longer-term target is for the NASDAQ 100. The semiconductor index, by the way, has been doing the same type of thing out here with regard to its consolidation, and however, it hasn't proven itself yet. But if the semiconductor index can ever close above, on a monthly basis, 1362.10, that's the all-time, well, it's not the all-time high. It was the all-time high. It was the high from back in 2000. March of 2000, that would be the break of its consolidation level. So I don't even need to see the semiconductor index break above the highs from March in 2018. Just a simple close above 1362.10 would pretty much go ahead and sink the ship. No, it would just simply give you the confirmation that the semis are ready to take off to the upside out there. So there's the better picture than where I was cut off with regard to the information. So so there you go, as Gus would say in my big fat Greek wedding out there. Now, I don't know about you. Do you like the Guess Who? Because John had asked us about sugar, and then I went into, the first line basically of the song "No Sugar Tonight." Now, for those of you that like that music, which I absolutely love the Guess Who, Canadian band, out there. But that tune, many of you probably have heard, No Sugar Tonight. That tune, I can't remember if that was written by Randy Bachman or Burton Cummings. The other side of that song, because they really turned that into a hit when they combined two songs. The story goes that they were just sitting around and asking each other, hey, do you have a song? And they both were in the same key. When I say both were in the same key, New Mother Nature. I just don't remember who wrote which one. I should know that, but I don't know. But one of the guys had written New Mother Nature. The other guy had written No Sugar Tonight. They combined those two, and it just turned out to be one of those great hits. Hey, did you see the 2018 Rock and Roll Hall of Fame last night? That was a pretty good show. I didn't catch it until it was like about an hour into it, so I like to see the first hour as well, but nothing like music. Hey, that's what these markets are. They're just music. It's just music that's being played out here, and we get to go read the charts, right? And the charts tell us where that next move is likely to be. If we take a look at what else is going on, let me just check the old email system out here, see if anybody is sending any cards and letters. Oh, it looks like no cards and letters being sent, no other requests. I don't believe that there are any other requests inside the net. I see somebody's typed in something, our favorite polar bear. So he's got the inspiration. We'll have to read through it. But my story came from Burton Cummings. And I actually went to see him solo. Yes, probably was by myself, but when he did a tour by himself, and it was great. I mean, it was great. In any event, let's come back to the markets out here. Try to figure out what is it that we can find out here. Let's take a look at gold. Gold priced in euros. Gold priced in euros right now, it's giving me fits. I mean, it's just giving me fits. Right now, it's trading at 1107, even Steven. And 1107.10 is the breakout area. And right now, what I am uncertain of is whether or not it's actually going to be able to close above that consolidation, gold price in euros consolidation level. It trades basically, I was looking at between 1064. It actually could be a tad lower than that in the 1107.10 area. A close above that ought to signal to you and I that gold is ready to resume its move higher in dollars. Now, resume its move higher could just be 1362.90. I don't think so, if in fact this is the way the pattern plays out here. But right now, what we haven't been able to see is gold priced in euros close above its resistance level. Do I think it matters out here? Absolutely. Just like I think it matters to understand where the Russell 2000 or the NASDAQ or the trophy out there, the Dow, is trading in all of the major currencies. It's just as important inside of Goldilocks. Because if we see, picture yourself trading at the trading desk as somewhere where you're trading in euros. Might be next door to your neighbor. You're working at the Goldman Sachs desk and they say, Steve-O, you're going to trade gold. You're exclusively trading gold for our clients in euros. And in Steve-O number 2, on the other side of the firewall, you're just trading gold priced in dollars. Now, if you're trading gold priced in euros and you see it break above a long-term consolidation, you might say how long you're referring to. I'm talking back to September of 2017. So now what we're talking is, I don't know, 8 months, 9 months, 10 months, something along those lines out here. If you see a breakout, you don't want to be short gold, not in euros, that's for sure. So momentum traders are going to go ahead and add to their position. Now, in the case of gold priced in dollars, what we know is it, too, has been trading in a consolidation, the bottom of which, on a closing basis, has been about the 1305.20 level. And if you know you're at the bottom of the consolidation, you could say, okay, I'm at the bottom of the consolidation, so I'm going to go ahead and start buying gold. Now you got gold traders pricing up gold in dollars and euros. Things ought to take off to the upside. But right now, Euro Stevie, is sitting here saying, man, I don't like this. Break out already, because you're at the top of the consolidation. If you were looking for a place to sell gold in euros, in essence, this would be it. But I wouldn't do that just yet. I would just sit tight and wait to see if that shiny metal can start moving, really in all currencies out there. That's where you'd get some traction. Right now, we got the Dow up 207 points, 213 points. S&P's up 27. Be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So Michael P. writes in, one, he wants to take a look at Valero. He also sent me a link, a cool link here to the story behind the Guess Who's song, American Woman. An interesting read. I won't go ahead and read it for you, but it was a link that I'm sure that you could find on the internet if you are interested in the Guess Who. Very cool story. Takes you back, unfortunately, to the Vietnam days, but the song not necessarily titled after what you might think it was. But Michael wanted to understand, and he just had a question mark, Valero, VLO, is the ticker symbol. So as we go take a look at Valero, Michael, one of the things that you and I can do is just take a look at the conservative A to B equals CD pattern that formed out here on its weekly time frame. And when I say conservative, I'm beginning with the August 2017 low, August 14th. It's a weekly time frame chart. That was at 64.22. Makes a nice move up, straight line move up into a high in January of 2018, the 22nd. The week of the 22nd, 99.95. Then it makes a move lower for a couple of weeks, gets down to 82.90, about a 47% retracement out there. And now we can see the 1-to-1 A to B equals CD is priced in at 118.63 or 115.11. I don't think that's the end of it. Looks to me like Valero would want to make more than a 1-to-1 A to B equals CD. That would take in the 128.35 level. Now, that's what's going on the weekly time frame. On a daily time frame, Michael, today is wave number 6. But then, number 6, and price is moving higher, doing with less relative energy. So just kind of creeping to the upside. I don't see anything here yet that would suggest some type of retracement, but moving higher with less relative energy, not exactly what you want to see, especially as you start to get towards maybe a short-term top out here. Again, longer term, those higher prices are still in effect. That B point was passed with volume, wide price spread. It had everything. If we look at the weekly time frame chart for Stevie's other system out here, we can also see on a weekly basis prices moving higher, doing less relative energy out there. Also on a weekly basis, you are in wave number 6. May have higher highs to come, but not the time to jump in on the bandwagon. Folks, stay tuned. Your favorite polar bear, my favorite polar bear, David White. He's up next. Tom O'Brien, 3 to 5. I'll be back with you tomorrow on Terrific Thursday. Have a great one.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.